The Rebel Capitalist Show.
Let's talk about how David defeats Goliath here, in the sense that Bitcoin defeats the dollar network. Going back, I've tried to give this some thought, and the conclusion that I keep coming to, because of, it's got to do so many things right in order to get through this volatility that we talked about, the transactional component of it, and then the debt component of it. And I'm not saying that it can't, but there's a lot of things that have to happen, and it probably is going to be a messy process, just like anything in the free market. But then you've got that network effect of the dollar. And I was thinking through this, and I thought, the most realistic way for the Bitcoin network to take over the dollar network would be for not necessarily the Bitcoin network to take it over, but for the dollar network just to completely implode, to where the dollar network is its own worst enemy, and Goliath, if you will, hits himself in the head with a rock instead of David doing it. And then David's there to take over and kind of is the phoenix coming out of the ashes. What do you think about that theory?
So I was going to say the exact same thing, which is that I don't actually think Bitcoin has to do much to really gain in stature relative to both the dollar and then other sovereign currencies. I very much aligned with the Ray Dalio, Lynn Alden, Luke Groman hypothesis that we are at the end of a long-term debt supercycle, where we've reached a level of sovereign and corporate and household indebtedness in the developed world where plundering the currency is really the only way out. So you can do the hard default and literally default, or you can do a soft default where you devalue the currency that your obligations are denominated in. And I actually don't think this is a contrarian view anymore. Maybe it was 5 years ago, but I think this is entirely in the mainstream. It's sort of what everyone expects now is inflation. And now the debate has shifted towards, well, actually, maybe the inflation is good, or maybe there's a social purpose behind inflation, right? Maybe
it implies low unemployment.
It'd be right. Like in the Weimar Republic, there was low unemployment in the early 1920s in Germany. So you might have thought that was great. There was also a lot of consumption. But yeah, I mean, high inflation, low unemployment, actually, it'll feel good for a while as everyone's, nominal incomes seem to be rising at, 5 to 7% a year, right? And their mortgages, their mortgage burden gets less in real terms. So people will probably be happy for a while. And of course, the fiscal injections are an excuse for the government to take more control over the economy and, implement their preferred social schemes, right? So everyone, as far as I can tell, is totally aligned in favor of very direct injections of cash into the economy. The central bankers are happy because inflation resolves the fiscal position. And, everyone expects that the U.S. will now basically undergo some version of what we did in the 40s, where we had low interest rates and relatively high inflation. And everyone seems aligned behind that. And in fact, the people that were denying inflation, it's obviously on the horizon now. Now they flipped and they said, okay, inflation is actually good. So I expect to see that. I expect to see a soft default. I expect to see virtually the whole developed world, especially in the West, devalue their currencies in concert. So I don't know what the dollar index is going to do, but I do know what the dollar is going to do relative to gold and hard assets like Bitcoin. Or that's at least what I expect. So I think from that perspective, the dollar is going to be its own worst enemy. And that's something that I think is actually aligned with the policy objectives of people in power. The other thing is that you referenced the dollar network. The dollar network is getting more exclusionary by the day, and worse. It's getting worse, right? So in 1990, the U.S. was the sole undisputed world superpower. They defeated the Soviet Union. They controlled all the Bretton Woods, the neoliberal institutionalist system, right? IMF, World Bank, WTO, UN. The U.S. was at the helm of all these organizations, and they effectively controlled global commerce unilaterally. Today, 30 years later, that's just 100% not true. They've sort of lost their grip on all of these organizations. China is creating credible competitors to all these institutions. China is internationalizing its currency. We're seeing capital flows go towards the yuan right now. If you look over the last couple of months, the world is now entering a multipolar phase, and the U.S. continues to believe wrongly that the dollar network is as powerful as it once was, and they keep on trying to use it for policy objectives like sanctions, targeted sanctions. You can't see, but on the bookshelf behind me I have the book Treasury's War by Juan Zarate. That's basically like, the book is like a long brag basically saying, yeah, we at the Treasury, we became like a policy, like strategic, almost military desk. Like, we transformed the sleepy Treasury into this immensely strategic arm of the U.S. kind of political apparatus in order to, achieve specific policy objectives by weaponizing the dollar. And they say weaponizing the dollar, to them that's a good thing, the fact that they turn the dollar into a weapon. But guess what happens? Everybody that uses the dollar now realizes they've got platform risk constantly, including our allies, because the difficulty of exiting that network is what we can hold against them. And, we can constantly threaten to basically deplatform them, which they can't tolerate. So the more we do that, and it looks like the dollar is becoming more and more politicized by the day, both domestically with the resumption of Operation Choke Point and so on, but obviously internationally, the more we do that, the more people are going to look to alternatives.
We didn't talk about it, but I think those are going to be the competing networks. It's going to be the digital yuan, the digital dollar, because I think the PBOC and the Fed will have a digital currency, a central bank digital currency soon. And then kind of the third competing network, if you will, may be Bitcoin, and they're just going back and forth. The one thing that I think could give them, the central bank digital currencies, an edge, unfortunately, is their ability to issue debt at a very low interest rate. Because if you're, foreign corporation XYZ, and you can borrow in dollars at let's say a 2% interest rate, although that's artificial, and the Fed may be holding the bag on that, but they don't care because they've got an infinite balance sheet. They can be insolvent, they can have negative equity, compared to, let's say, a superior network, but yet you've got to borrow at 10%. That corporation is usually going to take that 2% loan all day long. And then if you've got new money creation that's occurring in the specific currency, then that basically also creates future demand for the currency itself. So I'm not saying that's the reason why a fiat currency network will win. I'm just saying that's another cross current there that I've personally been trying to think through myself.
Yeah, no, that's a very interesting point. I agree. I mean, the government absolutely can subsidize the corporate sector for long periods of time, with effectively zombie companies and things like that, and holding interest rates super low. I mean, effectively, that's what we've had in this country for a long time now, is effective government guarantees, subsidies. I mean, you look at Q2 2020, government spending as a function of GDP was 55%. So at that point, the government was literally the majority of the economy, right? So their decisions determined economic outcomes. It's less than that today, but that's clearly, we've had this notion of stimulus being permanent, right? Normalized. It's not just a crisis reaction. It's just an ongoing subsidy. And so, of course, I expect to see that for the corporate sector. And it's clear, we don't have true capitalism. The money is not being priced. The price of money is not freely floating. And corporate outcomes are much more a function of your proximity to the state and sort of the decision-making apparatus there. That's it's clear to me, yeah. And so that's why we see so many business models that rely on subsidies, like Tesla, for instance. Like, Tesla's success is partly due to subsidies that they're able to obtain. And you see business models that are really successful that rely on this artificially low credit, especially in growth stage venture capital. You certainly see that effect. So 100%. I mean, the question is, like, how long can that Ponzi-like situation endure? In certain states that undertake that, there are eventually constraints. And I think you will see morbidity in the corporate sector the longer that endures, as creative destruction is arrested. And you kind of saw this like in Japan after their bubble in the 90s and early 2000s. Japanese firms became much less competitive relative to the rest of the world because there were so many zombie companies. They were not allowed to fail. Japanese firms and banks were repairing their balance sheets, and Japan had this like long-term solvency crisis that they sort of solved by injecting huge amounts of liquidity into the system. And then the consequence of all that was just that Japanese competitiveness went dramatically down, and Japanese autos shrank as a share of global sort of car exports, things like that. So that's the trade-off, is just much less vibrancy, much less sort of R&D spend, and you become a less competitive nation fundamentally. And so, I think that's what would happen here in the U.S. And, right now we live in a time of extreme mobility from a capital perspective, founder perspective. The whole idea behind Bitcoin is that, okay, now your wealth is untethered from your sort of geographic provenance. So I think what we would see certain havens for genuine capitalism emerge, and then other states would lose. They would have dramatic outflows. And we even see it within the U.S. today. So we're seeing a reshuffling from a more socialist style model in California. You see an outflow to Texas, or from extremely high tax burden states up here in the Northeast down to Florida, for instance. So you see that within the U.S. I'm sure it could happen on the international scale too. So yeah, I think that there's just like ultimate constraints there, but yeah, the short-term dynamics you describe seem very plausible to me.